The artificial intelligence boom is now testing the limits of investor appetite in the corporate bond market. AI giants are borrowing billions to fund their massive build-out, but investors are demanding higher yields to absorb the flood of new debt. And that is raising questions over how long the market can keep funding the AI race at this pace. Well, AI hyperscalers have issued a staggering $220 billion of debt so far this year. That is up from just $12.5 billion in the comparable period last year, an increase of more than $200 billion. Now, the borrowing is being used to fund data centers, computing capacity, and other infrastructure needed for the AI boom. But investors are starting to demand more compensation for taking on that debt. Amazon's recent $25 billion long-dated bond sale highlighted the shift. The debt priced at around 120 basis points above U.S. Treasuries, while analysts say that spread could have been roughly half as wide last year. Now, the message from investors is not necessarily that Amazon or Google are weak credit risks. Instead, the market is questioning how much new debt it can absorb and at what price. Now, tech bond spreads are around 89 basis points, 9 basis points wider than the overall investment-grade market. That marks a change for a sector that has historically enjoyed some of the tightest credit spreads, thanks to strong balance sheets and relatively low borrowing needs. But the scale of AI spending is changing that equation. Investors are also starting to demand larger concessions when new bonds come to the market. Alphabet's bond sale earlier this month was well received, but still required an estimated 10 to 15 basis point concession compared with its existing debt. Fund managers say that this is a sign of fatigue. Earlier this year, AI-linked bond deals were absorbed with little pushback. Now more yield is needed to get those deals cleared. And there is another limit, and that is portfolio exposure. Pension funds and insurers often cap their exposure to individual issuers at around 2 to 3% of assets. If the same group of AI giants keep borrowing, well, those limits could eventually restrict how much more debt investors can buy. For now, investors say, well, this is not a credit crisis. Companies such as Amazon and Alphabet still have strong ratings and substantial cash flows. The investment-grade corporate bond index also yields around 5.4%, helping keep demand in place. But the warning from the market is clear. AI companies may have strong balance sheets, but investors are no longer offering a blank check to finance the AI boom. If borrowing continues to rise, well, concessions could get larger and tech bond spreads could move even wider.